it in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game.
What is going on? If you've been watching the news, I'm sure you're as surprised as I am. And if you remember in my last video, I did say that we are seeing the rise of a war between Wall Street and retail investors, between millennials and boomers. And if you're like me, you really want to understand why and how did we get here. I blamed it on social media and the rise of trading apps like Robinhood last time we spoke. But I didn't want it to be an intellectually lazy argument. I do think that social media and trading apps like Robinhood did play a significant role since the 2008 crisis.
Down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
But I did some digging because I truly wanted to understand if there was a broader societal trend underlying what we are seeing today with Reddit and Wall Street guys. So I'm here to present my findings, and I think it is time for you and I to really understand what is the main driver behind this new revolution we are seeing in finance. In case we haven't met before, my name is Ned Ludd, and welcome to my channel. The story begins in 1929. It is the beginning of the Great Depression and one of the darkest periods in America's history. To this day, the Great Depression is still one of the worst crises the world has ever seen. The global GDP declined by 26% between August 1929 and March 1933. And just to give you perspective, the global GDP only declined by 5% in the 2008 crisis. There are many causes behind why the Great Depression happened, and I will not be focusing on the reasons why this crisis happened, but we will look at how it impacted the psychology of society. What we have to understand and take away from these years is that the Great Depression created a deep fear of Wall Street in America. There were bread lines, soup kitchens, and rising numbers of homeless people in cities around the country. People were committing suicide, and we saw the beginning of bank runs where families were going to the bank to withdraw their cash and put it under the mattresses. Fear was widespread in America, and there is a great quote by Roosevelt which epitomized the spirit of the time.
Let me assert my firm belief that the only thing we have to fear is fear itself.
The Great Depression reshaped the psychology of society. People were hungry, hopeless, and looking for a leader. Most people became skeptical of bankers and finance people, but no one was more skeptical than the silent generation. The silent generation was born during the Great Depression and between the two world wars. They were very risk-averse, more likely to save their money than to spend it, and they had a really bad perspective on Wall Street. So, if you were a bank executive at that time, you had a marketing and public relations issue. The Wall Street brand was tarnished by the crisis, and it was crucial to create a new ideal around the Wall Street brand. Your main question became, how do you get people to trust you again? And this is where things got interesting, as we will see, because this was the beginning of the partnership between Wall Street and the news. The goal was to make Wall Street more appealing and attractive to people again. But the way it was done can be criticized on so many aspects, and you will soon understand why I'm saying that. I truly believe that this marriage between Wall Street and the media is what led us to where we are today, and the rise of the war between people on Reddit and Wall Street hedge fund managers. But before we get to today, let's take a step back and look at what happened in the 50s. We just need to go fast forward after World War II to see how everything changes from then on. Millions of men and women who were deployed during the war were coming back to the country. We saw the rise of the middle class with massive construction sites for new homes and a big increase in spending for cars, appliances, clothes, and everything else. For the business press, this was a perfect moment to expand their reach and get Americans to believe in the stock market again, just like they did in the 1920s before the Great Depression. We need to take a step back and understand how the business press fits into the media. Historically, the media has always been in charge of informing the people. The role has been to hold leaders accountable and work in the interest of the general public. But as part of the media, you also had a subset, which we call the business press. The business press had a different mission. The goal historically has always been to help investors, and it is important to highlight that investors and the public do not always have the same interests. As an investor, your goal is for your company to maximize profit, but as a member of the general public, your goal is for a company to benefit the overall society. With the rise of the middle class after World War II, the business press was about to reinvent itself, and Wall Street was about to benefit from it. As I said earlier, the words Wall Street carried such a negative view, and Bernard Kilgore, who was the head of the Wall Street Journal, even reconsidered changing the name to something different. He wanted to change the name of the Wall Street Journal as a way to attract more readers. But instead, he decided to radically transform the definition of business news. He understood that to reach a broader audience, they had to remove the idea that business news had to be geared toward insiders and investors. There is a famous quote from him which says, "There are a hell lot more depositors than there are bankers." He shifted the direction of the Wall Street Journal and created a storytelling factory where the news was being dumbed down for lay people. They changed the target audience, and it was about turning the idea of business news into a story capable of reaching the masses. By the 1980s, we started seeing the effect of this radical transformation in business news. As a new generation of people who grew up in the post-war period came of age, Americans were moving into the stock market. This had to do with many factors, of course, including the inflation from the 1970s or the bull market that began in 1982. But I truly believe that a shift in the view of Wall Street that took place from the 1950s to the 1980s led to this bull market and a rise of the number of Americans who were investing in the stock market. The machine was working its magic, and the business press was converting non-believers into believers of the stock market. And this is when we started seeing a glimpse of the first wave of the gamification of investing. In the early 90s, only 32% of American households used to invest in stocks. But with the rise of internet trading sites, over 50% of American households own some stocks. It is believed that this was caused specifically by the CNBCization of the news in the 1990s. The movement was started by Roger Ailes, who was the former head of Fox News and the creator of what we call today entertainment news. The goal was to emphasize speed over depth, immediacy over context, and catchy headlines over substance. Everything was done so that everyday people would start enjoying business news the same way they loved watching sports or other entertainment.
Edie, you're controlling. Listen. Are we on right now?
Yes.
No, we're not.
Yes,
I thought we were just having a conversation.
And
your metabolism's not doing anything.
All right, where?
I mean, you're smart. We all know he's like brilliant.
You've watched?
But,
CNBC started taking inspiration from ESPN, and they were reporting on the stock market with the same excitement and passion as they would for a football or a basketball game. For the first time, financial news were being played everywhere from restaurants to bars, cafes, and even New York City pizza joints. This is when we saw the rise of the first phase of the gamification of investing. And at the same time, more companies were starting to help Americans invest en masse. Online brokerages like eTrade, Ameritrade, or Datek Online were enabling retail investors to start buying stocks. By 1999, the dot-com boom was rolling. The news channels were very active and turning investing into a huge game to be played.
Invest online.
The only difference between what happened in the 1990s and what is happening today with GameStop and Wall Street Bet and Robinhood is the scale of it. Social media combined with the rise of free trading apps like Robinhood multiply the impact small players will have on the big guys. The 2008 crisis also increased the level of animosity in the market and created a war between two generations. Robinhood and other trading apps not only made investing easy, but they gave people access to highly complex financial instruments without much education. I truly believe that what we are seeing today is a repercussion of the broader shift that the business news took to reach the general public since the 1950s. By changing the target audience and dumbing down the news to make it more entertaining, the business news gamified the world of finance. When you combine this larger trend with the rise of trading apps like Robinhood, which democratize investing, the only expected outcome is for people to see investing as a game. Now, to take a step back, I am not foolish enough to believe that we can pin down a single factor behind everything we are seeing in the markets today. There were many other things that had an influence, such as historically low interest rates and other unknown variables. But while doing my research, I thought that the intersection between media and finance was a very powerful aspect that was too often overlooked and needed to be highlighted. Alright, my friend, thank you so much for making it to this point. The intersection between finance and media is something that I think is overlooked, and I wanted to really explore it as I did in this video. I think one of my favorite quotes says, if you are a puppet in the game, you want to look at who is pulling the strings. And with that being said, when you look at how the media has evolved since the Great Depression, especially the media's relationship to finance, you really start seeing and understanding in a way why we are where we are today. With that being said though, I need to address the elephant in the room. As you may have noticed, I do not have my mask, as I usually did in my old videos, and that is because some of you have mentioned that it may be more welcoming, and also you want to be able to put a face on the person speaking to understand who is sharing the information. The core content and mission is not going to change. It's going to still be about how technology is reshaping the world. But the editing and what I do in my videos and things like that, how I break them down between parts and those type of things, you will see some change as we go. But I hope you're as excited as I am for everything that's to come, because there's a lot of things going on in the tech world and there's a lot of things to cover. So it's a journey we are going on together, and I hope you enjoy the ride. With that being said, please stay well, and I will see you in the next video. Bye for now.